All right, legacy traders, ready for a bonus? I'm giving it to you. Many of you have said, oh, my brain is so full and how can I take in any more? But you can, trust me, you can. And if nothing else, you can use this video as a resource for you in the future. I know that's what I did when my mentor shared with me these details I'm about to share with you. I was like, whoa, that sounds so crazy. But I later, 2, 3, 4 months later, I came back to this video and it was monumental. In the way that I perceive things and the way that I look at charts. So let's go ahead and get started. I'm going to transition over and then I'm going to bust up. Yeah, I said it. Bust up. This is a bonus presentation. And guys, let me tell you, it has 27 slides. It has 27 slides. So I'm going to fly through this thing. Honestly, let me do this. Come on. You got to see this face. Honestly, guys, this training alone, what I'm about to share with you, I paid a few $100s for. I think it was around $500, maybe $450 or something like that, for this training, and that busted this out. And mind you, the training was about 4 hours or so, and so they really went in depth. I'm going to plow through this in hopefully about 30 or 40 minutes. I am cooking some dinner, so you're going to hear some ding in the background. That's fine. That's fine. Hey, I'm doing life. But I just want to let you know that this training that I'm about to give to you is going to be power-packed. It's going to be power-packed. If you could say it, power-packed. And I don't really expect you to absorb it all now, but I want you to put that tool in your belt for whenever the time comes and you feel like, oh, I can learn a little bit more. Oh yeah, what about that bonus training? That's what this training is going to be all about. So let's go ahead and transition back and we'll get started. So welcome to Legacy Trading presented by Option Legacy. It's a 10-day intensive to learn to trade stock options for a profit right out the gates as you begin at day 10. So this is all about technical chart patterns. So I explained to you guys, this is a bonus on my chart basics. This is technical chart patterns. We'll be looking at different types of technical patterns. We'll be using candlestick charts where we'll see how patterns can impact our trading. And 3 different types of chart patterns are actually what I'll be breaking down for you are the continuation pattern, reversal pattern, and breakout patterns. So I am going to throw a lot of information out at you as I do always. I'm going to power pack it with some content and I need you to come back, pause, do a little bit of research, a little bit of homework on your own, look for these charts and these patterns as I share them with you, then come back to it where you can absorb a little bit more and we'll go on. So hey, here's 1-day chart patterns. So what do I mean by 1-day chart patterns? It's a pattern that happens within 1 day. I know it doesn't sound like a pattern if there's not more than 2 days, but there is. And these little guys, the Doji candle pattern, the star body candle pattern, and the spinning top can all be a pattern or an indicator to show you different things. So let's break these things down. The Doji, and mind you, it is body, that little gray sliver there, can either be green or red. So anytime going forward that you see a gray body, that little sliver or the insides of the wicks, is what's called the candle body. Anytime it's gray, that just means that it can either be green or red. So a doji has the same or extremely close open and close prices, which creates the small body, and then it has smaller wicks. So let's keep carrying on. So the star body, again, it can have green or red, has a smaller body, which means it does have fairly close open and close price, but they're not exactly the same or not just pennies away. They're pretty close, but it just means a small body. And has a small body with small wicks, and the wicks can be no longer than the length of the body. Follow that there. And that means that that's a star body. Then there's the spinning top. Again, it can be green or red in the body, and it has a small body with huge wicks, 2 to 3 times the size of the body. So remember, the wicks represent the high and the low. That just means it had a ton of volatility. It swung really high, it swung really low, but ultimately its open and close price were fairly close together. This is called a spinning top. So technical chart patterns, there's the doji, the star body, the spinning top. These all represent a neutral these all represent a neutral or sign of indecision in the stock. So they mean, what this means is, we'll say indecision. These represent indecision inside of the stock. So anytime you see one of these bodies, all that's telling you is that the buyers and sellers of the stock have no idea what direction it's going, and we can expect a move beyond. They kind of need to get their game together and decide what direction they want to go in, and then you'll see a move after that. If found at a key point such as support or resistance, they can signify a reversal of the current move. So let's say the stock has been in an upward trend, a bullish trend. Then right at resistance, that ceiling, it throws a doji, or even better, the stronger of the two is the three is the spinning top. It throws a spinning top right at resistance. You can expect a reversal, meaning that it will come down and bounce downward, or vice versa. So that's 1 day patterns. 2 day patterns. Oh yeah, there's some of them, and don't get caught up on these names. Just you really need to be able to recognize them. So what you're going to be looking for is, as I break down each one of these 2 day patterns, which means it takes 2 candle bodies to create this individual pattern, the dark cloud, the piercing dark cloud. Oh yeah, sounds dark. And then the bearish engulfing, the thrusting pattern, the piercing line, the bullish engulfing, the tweezer tops, the tweezer bottoms. Woo! Getting excited over here. Yeah, there's a lot. So hey, I'm throwing this out at you. I'm going to give you examples. Like, hey, there's the dark cloud. I'm going to give you examples. Use this bonus as a resource. And as you feel that kind of ability to learn and absorb more, come back and really hone in on these, because these patterns that I'm going to be showing you can really give you an edge in technical analysis that can give you a synopsis or an idea of what the stock is going to do. So hey, here is dark cloud. This is a dark cloud candle body. So remember, if there's gray, that can either be green or red, and then if it's obviously a color, that means it needs to be that color. So hey, there's resistance. It hits resistance, opens a little above resistance on that second day, then closes down into at least 1/3 of the previous day's body. So we can say that that gray candle body, no matter if it's red or green, up or down day, right at resistance, then the next day it opens above resistance. But what does it do? It closes down at least by 1/3 into the previous day's candle body. That is a strong indicator that this thing is going to bounce off of resistance, and it's going to be dark cloud coverage. The piercing dark cloud. Yeah, so this is kind of like the dark cloud, but look at the red bodies. You ready? Look at the red bodies. Red body, look at it. Boom, way bigger. Piercing dark cloud. Hits resistance, opens a little above resistance, and closes down into at least 2/3 of the previous day's body. This is a stronger sign of reversal. Let's continue on here. We're going to go into bearish engulfing. Mind you, follow the red body. Do you see that? So now this is what's called bearish engulfing. Remember, a bear's paw swipes down at you, means that the stock or the overall market is moving downward. In this case, think hungry candle. That red bear candle ate the previous candle. Anytime something is hungry, it is determined. How true is that? Have you ever been at Taco Bell late in the night when someone's got the munchies? You know what I mean? They got the munchies, and they get so frustrated that their food's not ready in 30 seconds flat. Whoo! They're determined. Sometimes they will climb that counter and hop over it because they are determined to get their food. So anytime something is hungry, it's determined. A bearish engulfing candle is hungry. It engulfs the previous day candle, and it happens right at resistance. This is a strong sign of reversal when formed, only when formed at resistance. And mind you, anytime you have bearish engulfing candle, or let's say a bullish engulfing candle, anytime you have a larger candle that eats the previous one, that is always a strong sign of reversal. That's oh, I should pay attention to this. So, and especially if it happens at a key point like resistance, that can be all the more stronger. So let's continue on. We're going to go to the upside now. This is the thrusting pattern, and these are a little bit to the upside. So it comes down, remember that gray can be green or red, and it hits supports, opens a little below the next day, a little bit below support, then closes up at least 1/3 of the previous day. So this is the exact same pattern as the dark cloud. However, it's the bullish version, and it's called the thrusting pattern. Look at the green candle body. Look at it as I switch to the next one. Boom. It just grew a little bit, didn't it? This is the, what was it? Dark cloud coverage. And let's see, what was that? It was the piercing dark. So this is the dark cloud coverage. This is the piercing line. It's the piercing bright cloud coverage. It's the bullish version of the piercing dark cloud coverage. So it hits support a little bit below, it hits support and opens a little below support and then closes up at least 2/3 into the previous day's body. See how it just got more hungry? This is a stronger sign of reversal, especially whenever it's at support. What can you imagine next? It's the bullish engulfing. Think hungry candle. Anytime something is hungry, it is determined. This is a strong sign of a reversal when formed at resistance. It's the strongest whenever it's formed, or excuse me, that says resistance. I meant it needs to say support. So forgive me. This is a strong sign of reversal whenever it's formed at support. And remember, anything that's hungry, even if it's at support or not, is a strong sign of reversal. However, if it's at support, a key point, and then it's engulfing and it eats the previous day candle, man, this is a very strong sign of reversal here. Tweezer tops and tweezer bottoms. You can use both tweezer tops and tweezer bottoms. So what do tweezer tops and tweezer bottoms? Notice that the bodies are far away from resistance and support, but the wicks, you want these two wicks to come up to bink bink a resistance or down to bink 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 to a support, and that's going to kind of create that kind of tweezer look, and that's what's called a tweezer top or bottom. The important piece is the wicks here, where the wicks of two candle bodies hit a support or resistance and can have a different size of candle bodies, as I gave in this example, and can have 1 to 2 bodies between the tweezers tops, so those wicks. So let's say you can see on the left hand side where those two gray candles are coming up and those wicks hit the same resistance. There could even be maybe like a doji or a spinning top or a star right in between those two, and then the second or the third day that wick could come right back up to resistance on the left hand side, and that could form a tweezer's top. These are signs of reversal for you. 3-day reversal patterns. There's evening star, morning star, falling 3, rising 3, double top and bottom. Yep, you got them. We're gonna break them down. So hey, here's the evening star. Remember that doji that we saw? Look, there's on the first candle body there, it's a pretty decent sized candle body, can be either red or green, up or down day. And then it throws a doji, it opens up a little bit higher, gaps up a little bit, and then it throws the open and close price of the doji are very similar, and then it has smaller wicks, and then the next day it has a strong or a big candle body move to the downstar, down to the downstar. I'm reading the slide here. Down to the downside. After a day of indecision with a doji, star body, or spinning top, the stock reverses. The smaller the middle candle body, the stronger the reversal. So that middle doji there, the smaller that body is, the stronger it is. The further away the middle small candle is from the previous and current open close prices, the stronger the reversal. So just kind of put that up. So you see the little doji right there in the middle. Let's say it's all the way up there over the words evening. If it was further away from the two bodies, it would be even stronger. Here's the upside of it. So you have that gray first candle body, can be either red or green, and then it throws down a doji, and then the next day it throws a large upward body. After a day of indecision, a doji, star body, or spinning top, the stock reverses. The smaller the middle body candle, the smaller the body of the middle candle, the stronger the reversal. The further away the middle small body candle is from the previous and current open close price, the stronger the reversal. So it's the exact same. We ready for some more? I know I'm throwing a lot out at you. Hit pause, rewind if you need to, but we're going to keep going. Falling 3, and guys, you will see these all the time, especially when you know what you're looking for. There's falling 3 and rising 3. We're going to break down the falling 3 first, but you will see these things all the time, and these are actually what's called continuation patterns, meaning that whenever you see this, it should be a confirmation that that pattern, in essence the falling 3, is a downward trend, so it would be a continuation to the downside. And the rising 3, which I'll go over next, is a continuation to the upside. So let me break it down for you. One large falling or bearish candle body filled with 3 smaller rising candle bodies, either dojis, star bodies, or spinning tops, then finished with another longer falling or bearish candle body going lower than the first candle body. So I want you to look at the second candle body and see how that's the second red candle body, and see how that's lower than the first red candle body. This is a continuation pattern, and you can do the falling 3, no matter it's called 3, but you can actually have 1 to 3 little star bodies in between. So I guess if there was only 1 star body in between, it actually would be a true falling 3, but it can have up to 3 star little bodies, or smaller doji spinning top bodies on the middle, and it's still considered a falling 3. So just follow along. It's just whoever named it that way. The smaller candle body cannot close above the first falling or bearish candle body's open. So that third gray small doji cannot climb higher than the first red bearish falling candle body. It's the exact same to the rising. This is another continuation pattern. One large rising or bullish candle body is filled with 3 small falling candle bodies, or dojis, or spinning tops or stars, then finished with another larger rising or bullish candle body going higher than the first candle body. You can have 1 to 3 small candle bodies in between. The smaller candle bodies cannot close below the first rising or bullish candle body. And whenever you see these, it's kind of like this. Someone says, "Hey Joe, I got a new car. It's a Honda Civic. It's silver." Before then, you never realized that there were silver Honda Civics on the road, but now since your best friend Joe got a silver Honda Civic, you're like, "I see them all over the place. Wow, you are one of 1,000 now. I never saw them before, but now I see them," because someone mentioned it to you and now you're aware of it. It's the same thing is going to happen with these falling 3 and rising 3. So let's carry on. So you got double top. This particularly happens whenever you're looking at a line chart. It's very easy to recognize at a line chart. You can double top. It sounds just like that. It's 2 little peaks that are kind of like a tweezer top. But remember, a line chart uses closed prices, the day's close, to indicate the line's point. So it's going to use the close price of 2 days that represent a top right at resistance. So similar to a tweezer top, but instead the wicks hit the same point, then reversing. It's the close prices hitting at the same point, then reversing. Best seen on a line chart. And you can have a double top and a double bottom. Double bottom is exactly the same thing, similar to a tweezer top, but instead of the wicks hitting the same point and then reversing, it is the close prices hitting the same point, in this case support, then reversing. Best seen with a line chart. So that's a little bit of reversal patterns, and the falling 3 and the rising 3 were continuation patterns. Let's go into the breakout patterns. Got rectangle pattern, wedge pattern, flag or pennant pattern. And let me just see if I can do this. You ready? Guys, I need you to know that I'm throwing a lot out at you. Take a deep breath. I'm going fast. I'm not expecting you to grasp all this right now. I'm expecting this to be that's a hammer. Boom, 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 whatever. That's it. I'm expecting it to be a tool inside your tool belt. So if you're feeling overwhelmed, if you're feeling like it's a lot, That's actually great. It means I'm achieving my purpose. So just use this as a tool. Pause it, watch, rewind, watch, rewind, watch, rewind as often as you need so that you feel confident and successful. But I guarantee you that you'll be able to see these patterns as I break them down. So let's carry on. Okay, let's go, guys. Boom. So breakout patterns. You have a rectangle pattern, a wedge pattern, flag, or pennant. So let's start with rectangle. Mind you, these gray bodies, what do they represent? Are they green or red? They can be either. So these bodies can be a group of green or red, bullish or bearish bodies. Normally begins with a larger candle body, then populates with 1 to 10 candle bodies of different sizes within the wicks of the beginning candle body. You must wait for the close price above or below a candle body's wicks before you trade directionally. So see those arrows on the right side? You need a close, not a wick, a close above or below the first initial bigger, larger candle body that created the rectangle pattern or the channel pattern. And once the close is either above or below, that can be a confirmation that it's broken out of that rectangle pattern and you can begin to trade directionally. Wedge pattern, it's very similar, just different shape. And so it normally begins with a large candle body populated by 1 to 5. There's really often not more than 5. If there's 5 candle bodies in a wedge pattern, that is impressive. But it's often more like between 2, 3, 4, somewhere around there. 2 and 4, I would say. So it has 1 to 5 candle bodies of gradually smaller size with the wick within the wicks of the beginning candle bodies. You must wait for the close price above or below the smallest candle body's wicks before you trade them directionally. All this shows you a wedge pattern is a pattern of indecision, but often once the decision, the direction, how do you say that? The decision for the direction is decided and it breaks out of this, it's a strong move. So you can look for these. The flag or the pennant, it's exactly the same as the wedge, except it kind of has a pole, a flag pole onto it. So it begins with a larger candle body to form the pole, then populates 1 to 5 of the bodies of gradually smaller sizes within the wicks of the first candle of the wedge. So this is a wedge with a pole on it. You must wait for the close price to be above or below the smallest candle body's wicks before you can trade directionally. You're waiting for confirmation. So homework, boom, 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 chart, chart, chart. Search through your chart list for each of the patterns described and see what happens. You're going to start looking for these patterns. Find 5 reversal patterns and see if Market Club triggers a trade or triangle before, during, or after the pattern. So this is for my Market Club members training. If you are more interested in Market Club and that is a resource to give you insight on directions, then go ahead and message me directly and I can absolutely give you some resources to that. Market Club's an indicator, a program, shall I say, that I use to help me trade directionally, and it's spot on. So again, guys, let's see if I can break out of this and transition over. I just created that as a resource for you guys. I paid a few $100s to learn that and really dive deep into that. I want you to begin to kind of like your friend's Honda Civic, kind of know and become familiar with those and then start looking for them. As you're looking at charts, you can say, whoa, that's something I see. So that's what I got for you guys. That's my bonus to you. All right, guys, enjoy. Ciao, ciao.